Hey everyone, I'm Mike from Wolfy Wealth Crypto Reports, and this might be one of the most important videos we've ever made. If you're holding Ethereum, if you're watching the markets, if you care about where global finance is headed, you need to hear this. Ethereum isn't just part of the crypto world anymore, it's becoming the infrastructure of global finance, and the data backs it up. Wall Street, major corporations, even governments, are now quietly building on Ethereum. And I'm about to break down exactly what's happening, why it matters, and how this could reshape everything from stablecoins to US Treasury bonds. Stick with me, because by the end of this video, you'll understand why Ethereum's role in finance is bigger than you ever imagined. Let's start with something huge. Ethereum is now being adopted as a Treasury reserve asset. Tom Lee, a top Wall Street strategist, just joined BitMine Immersion Technologies. They're launching a $250 million fund, not to buy Bitcoin, but to accumulate Ethereum for their corporate balance sheet. Why? Because unlike Bitcoin, which is seen as digital gold, Ethereum is digital infrastructure. It powers DeFi, stablecoins, and smart contracts. And with proof of stake, companies can stake ETH, earn yield, and help secure the network. This is the same playbook MicroStrategy used with Bitcoin. Now it's Ethereum's turn. Now let's talk stablecoins. Tom Lee called them the ChatGPT of crypto, and for good reason. Stablecoins, mostly built on Ethereum, are being adopted like wildfire by banks, companies, and even Visa. They act as a bridge between crypto and fiat, and they're becoming the foundation for payments, settlements, and liquidity across the world. Ethereum currently hosts over 51% of the stablecoin market, and it earns around 30% of transaction fees just from that activity. That's not just adoption, that's market dominance. If you're thinking long-term, you can't ignore how important this is. Ethereum isn't just attracting crypto natives. Robinhood is building its own Layer 2 blockchain on Ethereum. JP Morgan, one of the largest banks on the planet, is building stablecoins and financial apps, also on Ethereum. This tells us one thing loud and clear. Ethereum is the backbone of the next generation of finance. So if someone tells you Ethereum is just another altcoin, they're missing the bigger picture entirely. Since moving to proof of stake, Ethereum now rewards participants who hold and secure the network. This creates powerful incentives for corporations, institutions, even governments to hold and stake ETH. If you're building financial products, launching debt instruments, or just managing a treasury, it makes perfect sense to own and stake Ethereum token. This isn't theory, it's already happening. The infrastructure is there, the adoption is growing, the incentives are aligned. Let's zoom out for a second. Stablecoins are currently a $250 billion market. Some analysts think it could grow to $2 trillion. That would make stablecoins one of the biggest holders of US treasuries in the world. At the same time, they help strengthen the US dollar and generate massive fee revenue for Ethereum. This is global finance being rebuilt in real time, and Ethereum is at the center. Not as a side project, as the foundation. This is why this video is so important. We're not just watching Ethereum pump. We're watching it transform into global financial infrastructure. From stablecoins to treasury reserves, from Visa to JP Morgan, from staking to decentralized finance, Ethereum is no longer speculative. It's structural. If you're serious about investing, you need to understand this shift. That's why you're here and why this conversation matters. So here's what to do next. If you're holding Ethereum token, you need to understand the long-term game. If you're not, ask yourself, why not? And if you want to stay ahead of the curve, hit that subscribe button, give this video a like, and share it with someone who still thinks Ethereum is just another coin. I'm Mike from Wolfy Wealth. Thanks for watching, and remember, we don't follow the hype, we follow the strategy. See you in the next one.